On a submarine, you go out to sea for a few months at a time. There's no restocking. There's only a limited supply of chocolate bars and the smoky treat does, right? I don't smoke. I brought a pack of cigarettes underway with me just to make sure if I ever got to the point where I was out of coffee or something else, I could trade. Here's an interesting way cigarettes become extremely valuable underway, but then are suddenly worth nothing in my little microeconomy. So on a submarine, our air is full of amine, right? It's for cleaning purposes and whatnot, but it also makes you smell. And it super saturates your cigarettes. So when people pull into port, they'd rather just get new cigarettes than deal with the amine-soaked cigarettes of the past. It's interesting because underway, I could trade a cigarette for a small bag of coffee or maybe the chocolate bar or something else. Once we pull back into port, nobody wants my old cigarettes anymore. So what happens? My product, my currency is useless. It's garbage. They'd rather trade in chocolate bars than trade in cigarettes. Just a really interesting thing to think about. It puts you in a position where in this small economy, something that's worth an amazing amount of value, 3 months without a cigarette, somebody's willing to trade you probably 5 candy bars for that one cigarette. You pull into port, now it's worth nothing. So this example is really important when you consider other goods. Right now, we're living inside of an economy where demand is really high for certain things, such as housing, lumber, whatnot. And they're always going to have an intrinsic value. I don't think that houses are going to go down to zero by any means. It does make you wonder if they're overpriced. Okay, enough about submarines. Let's talk about the first market bubble in history. It was called Tulip Mania. And as you guessed, it had to do with the arrival of tulips into Holland.
Deep in the rolling foothills of 1634 Holland, Arnold Schwarzenegger's great-great-great-grandfather skips majestically through a field of tulips, dreaming of the profit he will soon make from his recent financial venture, while his wife rolls her eyes in the background. For you see, in only 3 years' time, she'll be able to say, "I told you so," as the tulip market collapses.
Tulip Mania is deemed to be the first major example of a speculative bubble. This tulip bubble, as I'll call it, happened between 1634 and 1637. As you might expect, it had to deal with the tulip market.
And I'm not just talking about extreme gardeners.
We're talking about sophisticated investors here that started up futures and options trading. The tulip was the Tesla of its day, symbolizing new things arriving from the emerging sea trade, and a fashionable way to show off how much you're worth. People began to collect them. The rarer the tulip you had, the higher your social status. So trade of tulip bulbs began to be associated with finance, with wealth, and eventually with easy money. After all, what better investment is there than money that literally grows on trees, or I guess on flowers or plants? Now here's the fun part. It's actually an amazing investment financially, as long as people want to buy the flower from you, because with each season, you could end up with your bulb giving off a couple of clones and literally doubling or tripling your money in a year. At least that was the argument. And for those long-term investors, the tulip can be propagated through both seeds and buds. Seeds from a tulip will form a flowering bulb after about 7 to 12 years. So obviously these financial speculations appeal to more than just your avid gardener. They became a way for people to make this easy money, make this fast investment, and they were watching the value of their bulbs literally go up day by day. The trading of the bulbs itself was causing the value of the bulb to go up. Folks began to buy and sell and trade the bulbs as a type of currency. And since tulips can only be dug up during the fall, they created future trade. They created contracts, basically said, I promise you this many bulbs in the fall. The price only goes up. Well, until it doesn't. This is the part of the story where the bubble pops. You see, the tulip trading became such a thing that people were trading their houses and livestock for the investment. The more rare the flower, the higher the price. At the start of February 1637, the rarest and most beautiful of the tulips went to market. It was a major deal because it set a new record for how high tulips could go. The entire market was listening. Some tulip bulbs were selling for 3 times a tradesman's yearly earnings. Could this secure their retirements? When the tulip failed to sell at auction, the entire market collapsed. Tulips went from a gold-level asset to a weed, to trash overnight. In the span of a month, something that was worth a house is now worth a gallon of beer. Okay, so why is this important for those of us that are investing in strong assets like houses and crypto and stocks and other forms of easy money or ways to get rich quick? The reality is, a lot of these could be bubbles. You need to learn how to recognize them to make sure that you're not the one stuck holding the bag of tulip bulbs in the end. It's just, if you fail to learn from history, you're doomed to repeat it. Right now, we are seeing a situation where there are more investors in the market than consumers of the actual product. Easy money has led to more people buying real estate for short periods of time to flip, wholesale, or BRRRR, with the expectation that the demand will be the same when they're ready to sell, when they're done with their project. I'm not sure how many of you were looking at properties last year in 2021. Properties I would expect to be selling for $20,000 were now selling for $50,000 to $60,000, sometimes even higher. People were buying fixer-uppers for a marked up price, then selling it to investors who were fixing them up and upping the price again. When the property sold, it just reinforced that the market value was going up in that neighborhood. I'm not saying that all this inflation is unreal, or that when the stock market calms back down, we will see an immediate crash of the housing market. Just realize, as investors are outnumbering normal consumers, the speculation will artificially pump up the market. And just like the best tulip, the best house may not sell, and then the market will react accordingly. Hey guys, this has been Paul with the Ugly Motel. Just a quick history lesson I thought was fun. I feel like that this kind of makes sense in the world we're in now, and I thought it'd make a good video. Hopefully you guys like it too.